For more than 2 decades, SpaceX resisted Wall Street. No quarterly earnings pressure, no public shareholders, no analysts questioning timelines. And now, that wall is cracking. After years of saying never, SpaceX is preparing to go public. Not a rumor, not speculation from Twitter, but preparation, banking discussions, and confirmation that the shift is real. This is not just about SpaceX. This is about the future of capital markets, private tech giants, and why crypto-native concepts like tokenized stocks suddenly matter more than ever. Welcome back to the Block Analyst. This channel focuses on deep, structured analysis at the intersection of crypto, traditional finance, and emerging technologies. If you appreciate long-form, research-driven breakdowns instead of surface-level headlines, subscribe to the channel and interact with the video so this content reaches serious thinkers. Before we continue, here is a quick disclaimer. This video is for educational and informational purposes only. Nothing you hear in this video should be considered financial, investment, or legal advice. I am not recommending the purchase or sale of any asset mentioned. All opinions expressed are personal and based on publicly available information at the time of recording. Always do your own research and consult qualified professionals before making any financial decisions. Now let's get into it. So let's start from the core question. Why does SpaceX going public matter so much? SpaceX is not a typical tech company. It operates across aerospace, defense, satellite infrastructure, and global communications. Through Starlink, it already touches millions of users worldwide and generates recurring revenue in a way that did not exist a few years ago. Up until now, access to SpaceX as an investment was restricted to venture capital funds, private equity firms, and a very small circle of institutional players. Retail investors were completely excluded. An IPO changes that structure. It turns SpaceX from a closed private system into a transparent, publicly valued entity. That shift alone has consequences far beyond the company itself. But the real question is not whether SpaceX can go public, it is why SpaceX is choosing to do it now. Everything I'm about to explain comes directly from the Ars Technica article you see linked below this video. For years, Elon Musk openly criticized public markets. He argued that quarterly earnings pressure punishes long-term engineering projects and forces companies to optimize for optics instead of execution. For a company like SpaceX, building rockets, satellites, and interplanetary infrastructure, that pressure was incompatible. According to the article, 3 things changed. First, Starlink reached a level of maturity. It is no longer an experiment. It generates predictable, recurring cash flow and behaves more like infrastructure than a speculative tech bet. Second, the capital requirements exploded. Starship, Mars ambitions, and satellite expansion require funding at a scale that private markets alone struggle to sustain efficiently. Third, internal liquidity pressure increased. Early employees and long-term investors need structured exits. Continuous buybacks are inefficient at this scale. The article also highlights something important. Elon Musk did not deny the IPO reports. He described them as accurate. Historically, that's as close to confirmation as you get without a formal filing. The timeline mentioned points toward 2026. Not guaranteed, market-dependent, but the preparation is real. This is no longer speculation. Now, this is where crypto enters the picture. The second website we need to look at is CryptoRank, specifically their section dedicated to tokenized stocks. Tokenized stocks are blockchain-based assets designed to track the price of real-world equities. Some are backed one-to-one by actual shares held by custodians. Others are synthetic instruments that mirror price movements using oracles and derivatives. What matters here is not the structure. What matters is behavior. Historically, whenever a high-profile company attracts massive public interest but remains inaccessible, crypto markets attempt to fill that gap. We saw this with Tesla, Coinbase before its IPO, and other major names. Tokenized stock platforms represent market demand before traditional markets open access. If SpaceX IPO momentum continues, crypto-native exposure products will almost certainly appear first, not because they're official, but because crypto reacts faster than regulated exchanges. Traditional IPOs move slowly. They're regulated, gate-kept, and geographically constrained. Crypto markets operate globally, continuously, and without permission. That difference turns crypto into a leading indicator of sentiment, not a follower. If SpaceX approaches an IPO, crypto markets will express anticipation, speculation, and risk appetite long before official filings appear. That does not mean these instruments are safe or legitimate. It means they reveal where attention flows first. Understanding that flow is an analytical advantage. SpaceX going public is not just a corporate milestone. It signals the maturation of private megacompanies and the convergence of traditional capital markets with crypto-native financial experimentation. Tokenized stocks are not replacing equities. They're test-stressing demand before access becomes official. When SpaceX eventually lists, the emotional pricing will already exist elsewhere. Serious analysis means watching where speculation appears first, not where headlines arrive last. This is how modern markets reveal intent before confirmation. This was the Block Analyst.